Thanks for tuning in to the Portland Real Estate Journal. I'm your host, Nick Shivers, serving Oregon and Southwest Washington. We're going to dive again deep into the numbers. We're at the end of April here, and there's a lot of uncertainty in the markets. The stock market's been getting smacked a little bit. Interest rates are going up. Inflation is more than likely going to be double digits. So what does that mean for the housing market? There's a lot of headlines. Crash. Okay, so let's really look at the numbers, the data. Not my opinion, the data. So some of the things we got to look at. Wells Fargo Home Builder Index, down 5 months in a row. Okay, so the confidence level of the home builders, new construction home builders, has dropped 5 months in a row. Oh no! Well, let's really look at the numbers. Okay, so 5 months ago, we were at a 91% index saying that the market is phenomenal. Now we're at an 84. So historically speaking, the confidence level is still excellent, okay? National Association of Realtors just came out 5 months in a row, less sales year over year nationwide. Okay, now let's look at the local data. First quarter, Portland Metro, active listings, meaning properties are coming on the market, down 1.3% for the year, 3.7% down on pending sales, and closed sales up 1.2%. So that's great. For the month of April, let's look at the Portland Metro numbers. Down 16% for available homes, active listings. Pendings down 2%, solds down 7%. You might go, oh, but solds are down 7%, the market must be off. No, active listings are down 16%. So that's a lot of the reason why our solds are a little bit lower in April. Okay, Clark County, for the year, we got down up 1.5% for actives, so more actives this year than last year. Pending sales down 3.5% and closed sales down 3%. For the month, we're looking at down 17% for active listings, pendings down 2%, and closed sales down 9%. Most of that is because there's just not a lot of inventory. Some other information that we have to look at and then talk about. Mortgage rates. Highest they've been since 2009. Whoa, what happened in 2009? You know what happened. Well, don't think that that's going to happen again. Why? A lot of equity. Number two, lending requirements are significantly better. My cat got a loan back in 2009. So don't see anything like that happening, but you got to take that into consideration. Mortgage rates have went up 31% since the start of the year. 1% increase in interest rates is a 10% decrease in purchasing power. So let's just pretend I'm drawing a big circle. That was the buyer pool in January. Well, interest rates have went up almost 2%. 2%. That's dropped that circle maybe 0.25%. Doesn't matter. You have two houses and you have 50 buyers. Before you had 150 buyers. Maybe now you only have 50, but you still only have two houses for sale because our inventory level is super low. So will you see a depreciation? Not at this time. CoreLogic just came out with kind of an idea of what the markets are looking like. One of the areas are our friends in Polk County, my buddy Matt, my listing agent down there, Polk County, Salem area. CoreLogic ranks it as an overvalued market. Why? Probably because more and more people were buying there because it was more affordable. So they have that listed as an overvalued market. Again, I do not see anything happening for the spring summer markets. We might see a little, I believe we'll probably see a slowdown, especially if the Fed keeps raising interest rates. I believe inflation at the end of this month will be around the double-digit mark. And that is significant information as well. The overall look at the housing market, strong. Why? Supply and demand. We have the demand still there, even though it's less than what it was because interest rates are going up, and the supply continues to stay low. If I'm a seller, and I know I'm gonna be selling the next few years, I'm probably gonna make sure that my home is on the market this year. If I am a buyer, I am going to make sure that I can afford my property, okay? Because the only way we get in trouble is if those unemployment rates go up. because people are losing their jobs. They're paying historic home value prices at a higher interest rate than we were seeing at the start of the year. That's the only thing that could cause some problems. But remember, rents are going up as well. So you got to look at what's better, renting or owning. So they'll look at that. Lending requirements are significantly lower. I do not see anything on the horizon that would tell me that we have a housing issue. Market's still excellent. It's going to stay excellent through the summer, in my opinion, and then we'll take a look as the data comes rolling in. Hopefully this gives you some information. Look forward to chatting with you anytime. Don't hesitate to reach out to us. We're here to serve. Have a good day.